Good morning, students. Today we are going to learn about financial accounting introduction part through this video lesson. So, introduction to accounting. In this video lesson, meaning, definition of accounting, features of accounting, functions of accounting, objectives of accounting, advantages of accounting, limitations of accounting, users of accounting. So, these are the learning outcomes through this video lesson. So, let us see one by one. So, accounting is a language of business. So, without language one cannot communicate with each other. So, that is why accounting is known as a language of business, because all the transactions, all the accounting records are recorded in accounting language. So, that is why accounting is said as the language of business. So, let us see the definition. So, the definition, so in this we have two phases. In first phase known as bookkeeping, in second phase accounting. So, the first part is known as bookkeeping. So, in this bookkeeping, this is an activity. In this activity all the financial data is recorded based on the nature of the principles, nature of the activities. So, that is why this bookkeeping is known as primary part of accounting. In this part, the bookkeeper, whoever recording transactions, that person is known as bookkeeper. The bookkeeper, all the monetary transactions are recorded in the books of accounts according to the nature of accounts based on some principles. So, that is why this part is taken by bookkeeper. So, the next part, the remaining part after completing bookkeeping part, the next part is known as accounting. So, this part, based on that the bookkeeper records, what we do, it is a process of identifying, reporting, recording, summarizing economic information to decision makers in the form of financial statements. So, what is the ultimate objective? All the business transactions are recorded in the books of accounts. Those records are to be identified throughout the year. This is a process of identifying all the business activities, all the business transactions. Those business transactions are to be reported to the concerned persons. Here, decision makers. So, that is why all the reporting whatever the activities we have, those are to be reported to the concerned persons. Concerned may be internal decision makers or external persons, users, what we say. So, this data, this information will be useful to the management, at the same time external and internal decision makers. So, this is the process of accounting. So, this is the definition of accounting. This is given by American Institute of Certified Public Accountants. So, what is the definition given by American Institute of Certified Public Accountants? Is accounting is an art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting the result thereof. So, here what we learned through this definition, this is a art of recording. So, earlier we discussed one bookkeeper has to maintain records, has to keep the records from day to day, transaction to transaction. So, recording is a art. So, which transaction is to be recorded, which transaction is not to be recorded. So, in further topics we will know what is the advantages, what is the limitations, what we do, what not we to do. So that is why this is a process. So after recording we have to classify, after that we have to summarize, after that we have to take decision making. So all the activities are regarding to money transactions only, not for other, not for non monetary transactions. So that is why the definition gives us that information. So this definition is given by American Institute of Certified Public Accountants. So let us see one more definition. This definition is given by American Accounting Association. So this definition, what is said, the association is said as accounting, the process of identifying, measuring and communicating economic information to permit informed judgment and decisions by users of the information. So here also it is a process, accounting is a process, accounting is a process that should be identified, that should be measured and communicated, communicating economic information to permit informed judgments. Judgments means users who are decision makers. So that's why, so whatever the definition is given by American Certified Public Accountants and American Accounting Association. So the main theme of is, this is an art, this is an art of recording transactions that should be classified, that should be identified, that should be classified, that should be summarized, that should be the whatever we summarize, that summarized part is to be given to decision makers. Based on that data only the decision makers will take decisions. So that is why this is a theme of definition. So whoever it is, the definition is, it is a process, accounting is a process, accounting is a language, accounting is used for only to record business transactions, business monetary transactions, monetary transactions. So this is the theme of accounting definition. So let us see the next one. The features. What are the features of accounting that we know through this lesson? So it is the art of recording business transactions. Just now we discussed, this is an art of recording business transaction. Which art? We have some principles. We have to keep a record permanently. So sometimes some persons may record to record this type of activities, it is easy, some persons may not easy. So that is why this is an art. So somebody can take the part of duty, some may not may take. So singer can sing the songs perfectly, that is a art. The other person may not sing, so he is not having that type of skill. So this is art of recording business transactions. So the next one, art of classifying business transactions. Business transactions also we have to, so of course we are recording business transactions, we have to classify, we have to summarize. So classifying also it is an art. So the other persons may not classify in a systematic way. So that's why to classify in a systematic way, it is also an art. Okay. Next one, the transactions and events must be recorded in monetary transactions and events. So what we are saying here, so whatever the transactions are recorded in the books of accounts, those must be monetary in nature, monetary in nature. So all the monetary transactions are to be recorded, whereas non-monetary transactions are not to be recorded according to the financial accounting, according to financial accounting. So transactions and events, so whatever it is that must be recorded in monetary in transactions, monetary in nature, monetary in nature. The other one may not be recorded. So so you see the second one, the next one, it is the art of summarizing financial transactions. So here also we see this is summarizing. So after classifying we have to summarize, because we have to give the information to the decision makers. So that is why it is also an art. Next one, it is the art of analysis and interpretation of these transactions. So how to interpret is the also one type of art. So sometimes some of the people may not know how to analyze, how to classify, how to interpret the results. So recording is a one type of art, classifying is one type of art, and summarizing is one type of art, and analyzing and interpreting the results. So these are the this is the process what we discussed in the definition part. So those this part is to be continued. This part is to be continued throughout the accounting. So that's why this is the one of the features of accounting. So next one, the results of the transactions must be communicated to the concerned persons. Concerned means here internal persons, maybe external persons, internal users, maybe external users, whoever it is sometime. So we will see in the next slides also, we will see who are the interested parties to know the information about accounting. So then we will discuss in detail. So next we will see functions. What are the functions we have in accounting? So deals with financial transactions, deals with financial transactions. Just now we discussed financial account deals with only monetary transactions, not non-monetary aspects. So just that's why accounting records only those transactions and events which are in financial in characters, So what we discussed just now in the definition itself indicate us, what indicates only financial transactions, monetary transactions are to be recorded in the books of accounts. Whichever is not monetary transactions are not to be recorded in the books of accounts. Okay, so that's why the function, the main function is to record only monetary transactions. That is the first function. So next second one, recording. So what we record, the basic function of accounting, this is the basic, because just earlier we discussed the language, accounting is said as a language of business, So that's why the basic function of accounting is recording. So there is no recording accounting, business transactions, monetary transactions, there is no meaningless, there is no meaning of accounting. So that's why it is started with recording of monetary transactions. So that's why this is the basic function. It is essentially concerned with not only ensuring that all business transactions of financial character are in fact recorded, but also that they are recorded in an orderly manner. Recording is done in the books of accounts. That is known as journal. So recording is the primary function of accounting. So that's why financial in nature transactions are recorded in the books of accounts. Where we are recording, we are going to record the entries in a book. That book is known as journal. In that journal, we have to record the transactions in orderly manner, chronological order. We have to record. What is the meaning of chronological? Day by day. So if you take in a day, there will be 10 transactions. After completing one transactions, the other transactions may be done. So that's why one by one, orderly, which transaction is done first, which transaction is done next. So in that day, after completing that day, the other day, the second day. So like that, you have to record orderly, in a chronological order. So that you have to remind. Next we see classifying. Classification is considered with the systematic analysis of the recorded data with view to group transactions or entries of one nature at one place. The work of classification is done in the book is called ledger, is called ledger. So, just now what we said, recording the transactions, recording the transaction is a basic function. Now, what we are saying, after recording there will be numerous transactions, there will be numerous transactions. May not be possible to pick up which transaction is first, which transaction is next, which one expenses, which one is liability, which one is payment, which one is, so like that it may not possible. So that's why according to the nature we have to classify, we have to classify all the assets, all the liabilities, all the expenditure, all the incomes. So like that we have to classify based on the nature, based on the nature we have to classify. Sometimes one customer again and again we may transactions may be done with one customer again and again. So may not be possible which transaction is done on which date and which amount. So it may not be possible. So have to classify. So according to the customers, according to the creditors. So like that we have to classify according to the nature of the transaction, according to the nature. Here nature means, so already we are recording monetary transactions. What is the nature here? According to the nature, sometimes sales, sometimes purchase, sometimes other things, cash sales, credit sales. So like that we may have different types of transactions. In monetary transactions also we may have a different type of transactions, different nature of transactions. So that's why we have to keep in mind, we have to classify. After recording we have to classify, then summarize. This involves presenting the classified data in a manner which is understandable and useful to the internal and as well as external end users of the accounting statements. This process leads to preparation of the following statements, the following statements. So what we are discussing, first the first step is recording, the next step is classifying. So next one is what we say, summarize. We have to summarize. So according to the requirement, according to the requirement, internal users and external users, internal users and external users, based on that we have to classify, we have to summarize. So this process, with this process it leads to prepare journal and to prepare final accounts. So in to prepare final accounts the process is like this: journal entries. First we have to record journal entries with the help of principles. With the help of principles we have to record journal entries based on the nature, based on the principles we have to prepare journal entries. After completing journal entries, all the journal entries are to be posted into concerned ledgers, posted into concerned ledger accounts. After completing posting, we have to balance each and every ledger, each and every ledger in the business activities. Each and every ledger we have to balance. By using that balances, we have to prepare one statement. That statement is known as trial balance. That statement is known as trial balance. This trial balance gives us the accuracy of the records, the accuracy of the records. Here especially we are following double entry system. Of course some of you may know, some of you may not know, because students from intermediate, some of the students may belongs to CEC group, they may know, the other group may not be known. So that's why we will discuss this topic in depth in coming video lessons, because what is double entry system, what is a single entry system, why we have to prepare trial balance, so that we have to know. So of course now we can give a simple simple classification. So every transaction gives us two aspects. Every transaction gives us two transactions. One is giving transaction, giving aspect. Another one is receiving aspect. Giving aspect and receiving aspect. These two aspects are to be recorded in the books of accounts. Got the point? So if any transaction is done, in that transaction two aspects are there. First transaction, giving aspect. Second one is receiving aspect. These are the two aspects are to be recorded in the books of accounts. That is the system of double entry system. So let us take example, sales. When we are selling the sales, when we are selling the sales, we are receiving cash. The other person receiving the goods. So let us take our on our view, we are receiving cash, at the same time we are losing goods. We are receiving cash, we are giving goods. These both aspects are to be recorded. So I think you may not got the point. Of course it will be discussed in detail in further. So just why we have to prepare trial balance, that's why just we discuss. So after completion of trial balance, after balancing means here the two balances, giving aspects and receiving aspects are to be equal. When it is equal, then that is known as arithmetic accuracy is there. The arithmetic accuracy is there. If there is no balance means what is the same? What is the meaning? Meaning there is no debit and credit balances will not be equal. Debit credit means here giving aspects and receiving aspects are not equal. So in the earlier example what we discussed, 10,000 rupees sales are done, 10,000 rupees cash we are receiving, 10,000 worth of goods we are giving. So in both aspects are equal. In the same sense, all the activities, throughout all the transactions, all aspects will be equal, but here may not be equal because it may not recorded properly. So that we will discuss in the trial balance. Okay. So after completing trial balance, we discussed after completing trial balance, we have to prepare trading account. This gives us trading result, that is gross profit or gross loss. Next we have to prepare a profit and loss account. So it gives us profitability, that may be net profit or net loss. Next final last one, balance sheet. Balance sheet gives us financial position of the organization. So with this I think the next one, analysis and interpretation. After preparation of final accounts, we have to analyze, we have to interpret the result, because the decision makers are there. Decision makers may take decisions based on the data, based on the information, based on the recorded data. So that's why let us see analysis and interpretation. This is the final function of accounting. The recorded financial data is analyzed and interpreted in a manner that the end users can make a meaningful judgment about the financial condition and profitability of the business operations. Because so with the help of the past data only, the management or end users or the users or the decision makers or the investors, whoever it is on top level management, they may take decisions based on the financial condition, based on the profitability. So then the business operations will be run smoothly. So the people taken decisions, whoever the people on the top level, they may take decisions fruitfully, healthfully, to run the business in a fruitful manner. So this is the functions. Okay, let us see objectives of accounting. After completing functions, we are entering into objectives. So let us see one by one. objectives to maintain systematic records of the business. Why we have to use, why, what is the main objective of, what is the objective of accounting? Let us see here, to maintain systematic record of the business. So here you have to keep in mind one thing, you have to keep in mind. So if any business transaction, if any business unit is there, in that business unit we may have numerous transactions. It may not be easy to remember all the transactions. Being a human being, it is not possible to remember all the transactions for a day, month, year, throughout the year or the further. So it may not be easy. So that's why when we are record all the transactions, it is easy to when we are maintaining all the records in the books of accounts, or somewhere we are recording systematic record, it will be useful and helpful to the business. So that's why one is the main objective is to maintain a systematic record. So when we are attending the class, if you write running notes, it will be helpful to you to understand what is the topic. Then you will be clarify the doubts when you are preparing to the examinations. If you are not writing any running notes, you may not prepare well in the examination preparation, because then you may get doubts. So that's why when I am saying clearly you write working notes, when problem part came into picture, then I will say, I say you have to write clearly working notes, so that you have to remind. Okay. Next, you see, to ascertain profit or loss of the business, to ascertain profit. So what is profit, what is loss, that we have to know, because being a decision maker, being an investor, being top level management, or being a employee, so being a government, so different users are there. So whoever it is, the main objective of business is to earn a profit, so that's why what is the profit or what is the loss, we have to know at a certain period. Next, to ascertain the financial position of the concern. So what is the financial position, what is the liabilities, what is the assets, we have to know. So for that purpose also we have to know accounting. Next, to review business decisions. Business decisions are to be reviewed based on the past records. So last year's profit, last year's loss, last year's expenditure, last year's income, last year turnover, last year liabilities, maybe long term, maybe short term. So like that, based on the past data, the decisions may be reviewed. So that is also objective, to make information available to all the users for decision making. So those who are the people who are involved in decision making, that decision making people will take decisions based on this information. So whatever the information is available here means accounting, they may use for decision making. So that is also one objective, to know the total amounts due to be received or to be paid. So here sometimes we have to credit transactions are to be done. Sometimes all the business organizations have to be followed. Sometimes cash there are two types of transactions, one is cash transactions, another one is credit transactions. So based on that, credit transactions, how much we have to pay to others, the other persons how much we have to pay, other persons how much is to be paid to us. So like that, what is the amount to be payable, what is the amount is to be receivable, that we have to know the help of accounting information only. Next, to know the information of tax planning and legal aspects and tax planning we have to know. Next, to be known replaceable and renewal or depreciation of the assets. So, being a manufacturing unit, being a trading unit, the assets may be depreciable. So, that is why when it is to be replaceable, when it is to be renewable, when it is to be that we have to know. So, advantages of accounting. Numerous transactions are recorded for future purpose. Yes, it is true, absolutely correct, because numerous transactions, number of transactions we have in business activities, those transactions are to be recorded in the books of accounts for future purpose, So that's why this is an advantage, of accounting. Next, profit and loss can be ascertained of the business easily, because why we are maintaining records. So how much expenditure was there, how much income was there, the balance between those we can get profit or loss, that can be easily ascertained. Next, financial position of the business can be known. Yes, definitely, because we are preparing balance sheet. So through the balance sheet, what is the financial position, that we will know. Next, business policies reviewed in the light of past records. Yes, just now we discussed. So whatever the business decisions are there, those business decisions are to be reviewed based on the past records. That is possible. Okay. Next, information available to various groups and users timely. So within the stipulated time, the information can be kept readily to needy persons, needy groups, needy users. So that's why it is also one of the advantages. Next, claims against and for the firm in relation to the third parties. So here sometimes we may do insurance, third parties. Here agreements may be there. Agreements means in the sense regarding to raw material, regarding to sales, regarding to purchase. So in the other aspects also, transportation, electricity. So like that we may have agreements also, MOUs, what we say, memorandum of understandings, that is also there. So to third parties, claims will be easy because accounting information is there. Next, accounting records help in tax planning and tax liability. So being a business organization, we are getting profit or loss. Based on that, it may be profit, it may be loss. Of course, when you are getting profit only, you have to pay a tax to the government. So that's why tax liability is also to be calculated based on the accounting records. So accounting information is helpful to prepare tax liability. What is the tax amount is to be payable to the tax department. Next, accounting information is provided is an evidence to the court. Sometimes court may be asked, what is the information you have? Sometimes whenever time comes, accounting information is to be produced as an evidence to the court. So that's why legality also, the accounting information is useful. Next, limitations. What are the limitations we have in accounting, that we have to know. So regarding to limitations, do not give cost information incurred by department wise, product wise, process wise, etc. of manufacturing units. So accounting information gives us accounting gives us whatever the past record is there, whatever the past monetary transactions are there, that is to be recorded. But here what we are discussing, cost information, do not give cost information incurred by the departments, incurred by the products, incurred by the process. That may not be possible by using accounting. So for that we have one more accounting, that is cost accounting. So in cost accounting we can give information department wise, product wise, and process wise, right. Next, second one, ignore non-monetary transactions. Ignore non-monetary transactions. Non-monetary transactions means, what is the meaning of non-monetary transactions? So whichever in financial in nature, that is monetary. Whichever is not in monetary, financial in nature, that is non-monetary transactions. So in financial accounting, we record only monetary aspects. We are ignoring non-monetary aspects. So that's why we are not recording. What is non-monetary means? Some of the employees may produce more than the target. Some of the people may not produce below the target. So this is the capacity. So some machinery may work excellently. So that is a non-monetary aspect. So such type of transactions, whatever is there in monetary in nature, that is to be recorded. Okay, right. Next, do not help in determining the price of the products and services. So financial accounting information may not give us to determine the price of the products and the services. So we are not ready to determine the price of the product by using financial accounting. So that is the limitation of accounting. Do not provide any details about plant and equipment losses. So regarding to plant and equipment process also, we don't have any information in financial accounting. That is also a drawback or limitation. Valuation of stock is not possible to ascertain. Valuation of stock. So in financial accounting, stock valuation is not possible. So ultimately we have to go for cost accounting. Yes, okay. No measurement for the productivity of the firm. There is no measurement. There is no measurement for the for the production, to measure the production of the firm. So that's why that is also a drawback. So next one, historical information is provided. Historical in the sense, whatever the information is done in the past, that is to be recorded in the books of accounts. That means sales is done, then you have to record. Purchase is done, you have to record. So like that, expenditure is done, you have to write. So payment is done, that you have to write. So whatever is done in the past, that is to be recorded. So all the accounting information is historical information. Whatever we done, that is recorded. So here we can say, after post-mortem, what we do? We can't do anything. So that's why historical information is provided in financial accounting. So right, next one, no cost analysis. No cost analysis. Regarding to cost analysis is the most effective part in trading and manufacturing. So that's why there is no analysis regarding to cost aspects. So that's why that is a drawback of accounting. So these are the limitations. Okay, right. Next we will see users of accounting. Who are the users, ultimate users of accounting? Proprietors means in the sense who are investing, who are the investors, who are the persons are providing capital to the firm, the persons known as proprietors, owners. So that's why they absolutely require accounting information, because they are the investors, they are invested for the purpose of profit. So that's why the persons are needed. Okay, next, creditors means the suppliers, the persons who are supplying goods on credit basis, the persons who supplying goods on credit basis to our business. So the persons are known as creditors or suppliers. They also needed. Why? Because the other persons, when time comes, they may pay, may not pay. So that's why the creditors also required. Prospective investors. Prospective investors means in future, further. Right now they are not investors, but in future, near future, they are the investors. That's why in near future, when we are going to invest something, we may inquire the information. So that's why the users of accounting, the prospective investors. Prospective means deemed to be investors. Deemed to be investors. In near future, they may invest. Okay. Next, employees. Employees also required. So when what is the here what is the purpose of employees? Why employees needed in about needed this accounting information means, when what expects employees expects salary, wages, fringe benefits, promotions, trainings. So like that they may expect something from management. So what is the information, how the information is the employees may think, will we beneficial or not, will we get benefit or not. So in that aspect the employees may seek the information about the accountant. Next, government. So we know ultimate regulating authority is government. Government what we say, the government may be state government, central government. The government may be state government, central government, whatever it is. The rules and regulations are formed by the governments. So the tax, we have to pay tax to the government. It may be state government, it may be central government. So the government is required accounting information. Next, regulating agencies. So regulating agencies means like SEBI, stock market, RBI, commercial banks regulating authority, IRDA, insurance regulating authorities. So like that they also, regulating agencies also is required accounting information, right? Next, consumers and public. Consumers, why the consumers is needed? Because consumers expect from the business qualitative products at minimum price. Qualitative products at minimum price they may expect. So what is the information of accounting? Then we are going to get information, this company is providing minimum price or the other company providing minimum price. In that aspect the consumers or public may expect the accounting information, right? Of course, price of the, not only price of the product, qualitative aspects, price of the product, and services aspects also, accounting information aspects also, the consumers and public may require this information. Next, research scholars. Scholars is not, who is the persons? The research scholars is persons who are going to learn something, always new topics. Always they search for new things. New things means the company's performance. How is the performance of the company? It may be working capital aspect, it may be liabilities aspect, it may be assets aspect. So like that we may have various aspects, marketing aspect, financial capital structure aspects, so establishment aspect. So like that we have dividend aspect. So we have various aspects. So the research scholars may do their research to get their degree, or they may get to know to acquire knowledge, So these are the users. So in these users we may have internal users and external users. Okay, got the point? Okay, thank you. So in this video lesson we learn what is the meaning, what is the definition, the persons who are given by the definitions, what are the functions, what are the objectives, what are the objectives, what are the advantages, what are the limitations that we learn. So we will continue in the next video lesson. Okay, thank you. I hope you got understand what is financial accounting introduction part. So it is continued in next video. Okay, thank you.